Hey guys, so this is Demetrius with Akeelah Corporation, and I'm here today to talk to you guys about some investing kind of thing. We're introducing what we have as our Akeelah Trader System, and it's a way to finally make investing pretty simple. And so I'm going to talk through a couple of things with you today. Hopefully, you'll find this review here pretty informative, and it's something that can kind of help energize you to start taking a look at possibly doing some investing things on your own. Okay, so let's jump into this. First of all, I want to start this. Everything that we do here at Akeelah is based and centered around godly principles. And so, one of the things I want to start out with as to why we're here is discussing the parable of the talents. I like to use this as a good reference for some of our training materials. And so, over in Matthew 25, Jesus gives a parable about the talents. He talks about a ruler who goes away for a period of time, and he leaves his servants in charge of some of his possessions. And so, this is a financial parable, and so he's talking about to one of them he gave responsibility of 5 talents. To another he gave 2, and to another he gave 1. And he put these into their responsibility and said, "Hey guys, I want you to take charge of these things." While I'm going away. And so he went away for a long period of time. He came back and kind of, had to reckon with his servants. And one of them came to him and said, "Hey, Lord, you trusted me with 5 talents. And in return, I've got you 10. I've gotten 10 talents off of this." And he says, the Lord's response here was, "Well done, you good and faithful servant. You've been faithful over a few things. I'm going to make you ruler over many." And so he tells him, enter into the joy of your Lord. The next one came back, had a very similar story. He said, "Hey, you've given me 2 talents. I've turned those into 2 more." And so again, he says, "Hey, well done. You did a great job." The last person came to him, and this is the core of what the teaching, I believe, that the Lord is trying to tell us here. And he came to him, he said, "Hey, you had trusted me with 1, and I'm paraphrasing here, but I did nothing with it. I knew you were hard, and I was scared, I was afraid, I wasn't really sure what the right thing to do was, and so I hid it. I pretty much did nothing to it. And so here it is. Take what's yours, and kind of hope you're happy with that." But I'm pretty sure, much to his surprise, the Lord of this servant, the master here, was very angry. The Bible tells us about he was wroth with this man. He was furious, and he said, "You know what? You were afraid. You knew that I had high expectations. You knew that I expect to reap something if I didn't sow on it." He says, and this phrase here in the Bible says, "You should have at least taken my money and put it to the exchangers." So that I would have, when I returned, I would have received my own, and I would have had interest on it. I would have had some kind of profit on it. But to take it and hide it and dig away in the ground and do nothing with it, he's saying that's very, very lazy. And in fact, he calls him a wicked and lazy servant. And so that's kind of the example I like to use there, because that's a pretty strong reference there. But unfortunately, it's a situation where most people find themselves, from a financial standpoint. Most people find that they're doing very little, if any. Maybe we're not that wicked and just completely taking all of our money and just hiding it and burying it in the background or something. But also at the same time, most people are, generally speaking, doing very little themselves, to better themselves financially. And so we want to talk about today our Akeelah Trader System, and something that we've created and been working on for a long period of time. And it's centered around everything that we do here is to try to help people better themselves and find opportunities financially to increase. Okay, so let's get into this. So let's talk about why people don't invest on their own. What are some reasons why people just say, "You know what? I don't want to do that." Lots of times, as people have little to no financial education. Maybe that's you. You haven't gotten any kind of education on financial things. You don't know much about that. You didn't go to school for that kind of stuff, and so you're not familiar with those kinds of things. So you don't want to delve into something like that. Most people have never invested money into anything outside of having a job, going to job, getting a paycheck, and those kinds of things. Most people just never done any of that. Among those who have, we've all heard these horror stories, right? about, hey, I invested something into this particular market. And, after a period of time, something bad happened. I didn't get the return. I lost my money, so I'll never do that again. And that's true. I'm sure all of us, myself included, have had those kind of experiences. Also, we're taught to kind of leave the investing to the experts. There's tons of companies. There's the Fidelities and the Charles Schwabs and the E.F. Huttons and all these kind of people out there. Very well trusted, reliable people. Who that's their lifestyle. That's their that's what they do. Their careers is helping people make investment decisions and doing it for you. But most people are unaware that individuals can invest on their own. And while it is not advisable, to take your life savings and take everything you have and go run off on your own to do that, part of our goal and what we're endeavoring to do is to help people to understand that you can do some of that. You can do some of it. You can be responsible, take a small portion of what you have available to invest, a small portion of your financial assets, and you can on your own make some investment decisions and get into things that can allow you to prosper without having to completely turn everything over to someone else. Okay, so let's take a look at a few other reasons. Another thing is lack of time. Right now we live in a very fast-paced, fast-moving, society where our jobs and family they require the majority of our 24-hour days. If you're lucky to get some reasonable sleep time, 6, 7, 8 hours of sleep, the rest of that time you're either at work or at ball games and recitals and school, participating in school events, those kinds of things. And that's life. That's very understandable. Unfortunately, we just don't have enough time. And learning takes a lot of time to be able to learn about investing and learn financial markets. That generally speaking, and rightfully so, can require some time. And so most people just don't have enough time. So as a result, we don't do it. Okay. One other thing that is a reason why a lot of people don't invest is they're difficult systems and regulations. There's all kinds of laws about who can do what. If you got a 401k, well, there's 17 pages of restrictions on what you can do. You can't withdraw this amount of money. You can't put this in. You can't take it out without having these kind of penalties. If you go into any kind of other investing, well, there's tax implications and there's all of these kinds of things, some monetary penalties, some civil and criminal penalties about trying to do things financially. And so people, generally speaking, stay away from that kind of stuff. So let's look at a few things here that's a part of these penalties. One thing, if you're here in the U.S. Where we are, is that FINRA, this is one of the large regulatory agencies that regulate the overall financial markets, is they have some pretty strict requirements. And as an individual, if you want to individually invest in the markets, let's say things like the stock markets, options, those kinds of things, you have to have a minimum of $25,000 in your account in order to trade in the markets. And that's generally because those regulations, they say they're designed to protect, the small guy from losing his funds and, being financially irresponsible and those kinds of things. But nonetheless, it's really, from our standpoint, it's a hindrance that is preventing people from tapping into some of the wealth and some of the financial opportunities that are available in these bigger markets. So not many people have $25,000 that they can say I can just take and put into an account and start trading or start buying Amazon stock and buying gold and all these different kinds of things, trading the Dow Jones market. So that makes it very difficult, but it does apply to all different kinds of accounts. If you have your large accounts and things like, again, TD Ameritrade, Robinhood, those kinds of things, you cannot trade those things on your own unless you have at least that $25,000. The financial markets are pretty complex. They require a lot of specific steps to execute a trade. You have to follow certain patterns and make sure that you put the right decimal on the right thing, and so that you didn't just you decided to buy $100 worth of Apple stock, and because you put the decimal in the wrong place, you actually bought $1,000 or $10,000 worth. Those kinds of things can be pretty complicated. So those things usually keep people away from that. But again, that's what we're here to kind of let people see that you have those kind of opportunities, and it does not have to be that difficult. Okay, so other aspects of why invest on your own. What is our money doing right now? What are most people doing? And so here, I want to take a look at some traditional investing kinds of things. Most people have some kind of savings account, right? And a savings account is pretty much a way to stick money um, into, I would say, a black hole at the bank. Give the bank X amount of dollars and receive some nominal amount of interest back from them. But one of the and most people do have a savings account, and we're all taught, hey, put some money in savings, and you want to save it and store it up for a rainy day and all that kind of stuff. The problem with that is that the way banks operate is the rates that they have to extend to you on your savings accounts, and even some of these smaller other asset savings things, that rate has to always be less than the rate of inflation. And so what you end up doing is you're actually saving something that is worth less as time goes by. You're saving a depreciating asset. So if you put $1,000 into a savings account, for example, in the bank, and you save it for a year or something like that, and the bank is going to give you 0.1 to 0.5% interest or something small on that. Well, a year later, that $1,000 is not even worth $1,000. So they paid you $1.50 interest on that, and it's worth less a year from now than it was when you put it in there. So you're actually losing money in a savings account. Then there's things like 401ks, and the majority of us have those kinds of things. If you work at a job, that is a very good savings aspect. We're not knocking any of this. We're just kind of giving you some of the relative points for you to look at the size of these kind of investments. So 401k plan, you're good. Most plans are doing great if they're producing 6 to 10% a year return on your money. And lots of employers will actually match your 401k contribution amount. So that definitely makes sense for you to contribute to those. So that's important. But the rates on there somewhere between 6 to 10% a year that return you can expect. Real estate is another good business venture. Many people own real estate, maybe rental houses, rental properties, those kinds of things, Airbnbs and such like that. Typically 8 to 10% is a pretty good return on that. In an aggressive market, it can be a little more than that, 12, 15% or something. But those are the range of those returns. And small businesses, according to the Small Business Association, businesses are doing significantly well if they're seeing 12 to 15% return annually on their money. And so those are the things that people would traditionally do. And they were all taught that, hey, this is the kind of dream. Go and, save your money, use your 401k, and that after 40 years or so, you'll have enough money to retire or get a business, get into some real estate. And all of those things, again, are fine in their own, but they don't begin to compare with some of the non-traditional things, active things that you can do and learn to do on your own. And things like stock trading, crypto investing, Forex trading, these kinds of things are those avenues which traditional consumers, the regular average Joe retail person, is highly, highly dissuaded from participating in. If you ask anyone about that, they're like, oh man, no, you better leave that stuff alone. I heard somebody that was day trading and trading stocks, and, they lost all their money, and, some guy killed himself because, he lost his money. And so you're going to hear all these kind of crazy things. But nonetheless, on this side, this left side of the traditional investing, we're taking our money, you're taking your money, and submitting it to a market to get these kind of returns. But behind the scenes, the powers that be, or the organizations, the people, the investors that are really handling your money, the banks and such, what they're doing is they're operating on this right side. And so your bank, Wells Fargo or Bank of America or, SunTrust or somebody like that, whoever your Truist, whoever you happen to be dealing with, they're taking your $1,000 that you put in your savings account and they're giving you 0.5% interest in a year. That $1,000, they're taking it on this side and they're operating it they're trading it in the stock market. They're trading it in the futures market, in the Forex market, in the crypto market, believe it or not. Even though most banks will tell you stay away from crypto, there's just been a tremendous increase in the amount of banks who have increased their holdings in crypto, and so they're taking your money and operating on this side. So while they're paying you 0.5%, or if you got a CD, I was at the bank the other day and they had a CD, and man, I think the rate for the CD for 13 months was going to be something like 3% or 4%, maybe even 5%. So that was very big number coming from a bank. But even if they paid you those kind of rates on your money, they're over here and they're making 150, 500, 300, 1,000% interest on the same money. So we're wanting to learn how to operate on this side. How do I get from over here to over here? How do I get from slow money to more money? That's something that we're trying to educate people to understand and know that this is nothing that's very complicated. It's something you have to do due diligence with. And, little by little, you can start to see some substantial improvements in that. Okay. Let's go. So let's talk about this whole financial market. What is this market behind the scenes? The biggest market as to where the majority of assets are traded is the Forex market. And that's just called the foreign exchange market. And in that market, it's really, there's several things that's included in that. It's not just Forex. It's really, I should say, the foreign exchange market and the futures market. And so this is the market to where really the big money, smart money, large institutions trade in. It's the largest trading network in the world. Multiple assets are traded on this market 24 hours a day, either 5 to 7 days a week. Things like currencies. They're exchanging the U.S. dollar for the Japanese yen and the Australian dollar for the Canadian dollar. Those are currency exchanges. Stocks that are being traded in the stock markets. All your major stocks, Amazon, Apple, Netflix, Google, Facebook, Tesla, all of these kinds of things are being traded in the regular stock market, but they're also traded in this same foreign exchange market. Energies, things like oil, natural gas. Most people don't realize you can trade the price of natural gas. Instead of complaining about the price of gas going up, you can take advantage of the fact that the price of gas is going up and you can profit from that. You can buy fractionally small portions of natural gas or of oil, and you can profit from that if the market's going up. If it's going down, you can still profit that way. Indices, these are the things like the major financial markets, the futures is what they call them. The Dow Jones Industrial Average, the top 30 largest U.S. Companies on that exchange is being traded. The NASDAQ 100, the top 100 tech stocks that are traded in there. The S&P 500, all of those, they are indices. They're called indices. There's basically just a culmination of all of those together that performs a metric that just averages the price of all of those. So if you don't want to take your risk in any one particular stock, you can invest in the indices. But again, the normal average everyday person cannot do that. You cannot go to just open an account and start trading these things unless you're inside of these other financial network systems. As I said previously, some of the laws are such that you have to have $25,000 before you can open an account just to get access to start taking one trade. And at any point in time, the value of your portfolio drops below $25,000, you're cut off. So they're saying you got to have big money to operate here. So these markets are controlled predominantly by large institutions, big hedge funds. But the futures and the Forex market, they are not regulated by FINRA. They're regulated by a completely different agency, the NFA, and it has no rules on day trading, no rules on a minimum amount that you have to have, no restrictions on things like if you buy an asset, you cannot sell it that same day. Those are the kind of restrictions that are put on regular retail consumers like you and I. Excuse me. If you want to start trading in these big financial markets, typically they would say, okay, if you bought Tesla stock in the morning, and the stock just took off and it started skyrocketing and had big profits, well, you can't sell that and get your profits the same day unless you have that $25,000 in your account. And so all these crazy kinds of things just make it extremely difficult. But inside of this futures market, inside of this Forex market, you are able to trade. Anyone can start with as little as $500 or so, and you can start to trade in these financial markets and get the same access that the banks do, the same systems that the major financial institutions are operating on. You have direct access to that. You can trade when you want to trade. You can buy when you want to buy, sell when you want to sell, without those kinds of restrictions. So you just need the ability to tap into these markets and then have some kind of knowledge of how these things operate, so that you're able to profit from them. And that's where that's the major part of where we come in to help people. Okay. So overcoming some of these challenges here. What are some of the challenges when people start initially to look at these kinds of systems? One is they're big learning curves. There's a steep learning curve. So you have to learn a lot of complex, non-intuitive terms and processes. And that's, again, why most people kind of stay away from that. But it's something that you can learn. It's something that is not difficult. It's not rocket science. You don't have to be smart to operate in these markets. It could help, but it's really not necessary. And sometimes the less that you know, the less financially educated you are, the better you can do in some aspects of it. But we're leading to a point here where we're kind of showing you how we've created systems to help people, bypass a lot of the traditional challenges that would keep you from investing. So all these complex terms, a lot of them are non-intuitive terms and processes. There's things like the major financial markets, they operate on things called pips and points. They don't necessarily just say dollars. I want to invest $5 or $500 in something. Well, how many pips is that? How many points is that? You have to understand that kind of lingo in order to be successful. Candlesticks, you see patterns like these things back here. Some people have never seen financial charts. Well, what are these candlesticks? And what's the red one and what's the green one? And why is one big and one short? And why does one look like it's got a tail on it and a head? And all these kinds of things. Those are very complex things that one would typically have to learn in order to succeed in those kind of markets. There's lots of technical analysis techniques, predictory kinds of things to be able to that you would need to know to when to actually implement trades in these. Other challenges are risk management kinds of things. People are afraid, if I got into trading in these kind of markets, how do I keep from losing all my money? Many people start into these markets and they, end up risking too much at the wrong time because they got a feeling or a tip from their uncle or something telling them how to do that. And so those can be big challenges there. Emotions, things like trading and fear, greed, FOMO is an acronym for FOMO, for the fear of missing out. That's one of the biggest challenges to people succeeding in these financial markets. They see an asset that's increasing in price and they want to jump on and start buying it. Well, you're buying it at one of the worst times because now everyone who bought earlier, they're ready to take profits and you're getting ready to take a loss. So a lot of these other things here, inconsistent trading habits, just following signals, just buying something because somebody told you to buy it, and just overall lack of guidance, not knowing what to trade, when to trade, and how. Those are some of the big things that are challenges to that. So how do we come in and how can we help if these are the significant issues here? Is, well, with Akeelah, we created our trader system. And this trader system is an advanced AI system that's designed to help normal people, everyday people, take advantage of some of the opportunities in these global financial markets. It's comprised of two different elements. One is the Akeelah Technical Advisor. That's the actual system that goes in and takes the trades and find trades opportunities, and it's a trade manager. Both of these work together to find high probability opportunities and manage them, manage the risk. And it's able to do so all without your direct input on every little element of it. You're able to give it some overall guidelines, some risk settings, tolerances, security things that are important to you, and go from there. So we created something that we call a REST system, and this is designed to help ordinary people like us. And so the elements that we say you can leave the rest to us, join with Akeelah and leave the rest to us. The biggest part is that risk. Risk we know is a part of any kind of investment. If anyone talks to you about an investment and they say there's no risk involved, they're lying like the devil. Turn around and run. But risk is a part of everyday life. If you have any money invested into anything, it's always at risk. So our system uses tools which protect your account from significant losses, and it always manages those risks. It says, okay, at any point in time, how much am I exposed to? My total amount that I have in my account, I don't ever want to have more than X percent at risk. Our system automatically manages that from your input, and it will manage that and make sure that you'll never, ever, ever at any point in time have more than what you desire to risk at risk. The next piece is education. So becoming a successful investor, I mean, it requires a lot. It can require a lot of years of training, a lot of years of education, reading books, studying financial things. Well, our system was created with inputs from traders who have a lot of this experience. We have a team of traders, of investors, and people who have decades of experience operating in these financial markets. Mentors that we've used and other experienced traders who've helped us create this kind of system based on their education and based on their experience levels. And so the system also uses AI technology, some artificial intelligence, computerized. We're taking advantage of technology to say, hey, once we've created systems that are successful, then how do we use computer systems, intelligent systems to help us make sure that we can be consistent with those. So the education is built in to these systems. We have the ability to analyze the market and make decisions and do so, without directly having to have someone, respond at every particular time. And so computers are great for this, and AI systems. This is one of the things to mention here. Because some people are kind of concerned, what is this AI? And if you're just now hearing about artificial intelligence or computer AI technology, we're decades behind. The banks and financial systems have been using this at least for the last 25 years. These kinds of systems, and that's what actually controls the majority of the market, are computer systems that's telling the price when to go up, when to go down, et cetera. So we're just, building on that and using it to our advantage. The other part, the S, is for simplicity. Okay, can we please just keep things simple? Keep it super simple. That's the goal. Our system automatically identifies trade opportunities. It automatically decides how much to risk based on input that you tell it. It decides when to enter the trade, to buy something, when to exit, when to sell it, and to get out. You just provide your input and it does the rest for you. So our goal is to make it simple for you, because the last and most important element here is time. Time is our most precious commodity. It's something that we can never get back. God has given all of us 24 hours in a day. And right now, most people operate financially in a mindset that says, hey, I exchange my time for money. People use this phrase and say, time is money. Well, I beg to differ about that. Time is extremely much more valuable than money is. And so most of us are exchanging our time for money on a job. And that's time that you're never, ever, ever going to be able to get back. You're never going to be able to go back to when your daughter was 2 years old. If she's 18 now and getting ready to graduate high school, you're never going to be able to go back and say, I wish I was at that recital. But you weren't at that recital because you were at work. And so the time part of that is very important. And so our systems are designed to help us take advantage of the opportunities in the financial market without requiring our time, because legitimately right now, most of us have to work. There's nothing wrong with that. We just want to be able to make a shift to where we're exchanging our time for money and make a shift to where our money can actually start to produce things for us so we can get our time back. The Bible talks about we should be redeeming the time, redeeming our time. Redeeming means to buy back, to purchase, to reacquire. And so we're given this time, but we need to be able to buy back. I want to buy back my time. I do not want to spend 40, 50, 60 hours a week working at some company just because I need income to provide for me and my family. I want that time. Now I need the income. Don't get me wrong. I need the money. Bring me the money. Show me the money. But I don't want to have to give up all my time to do that. And so our system can trade, can interact with this, do these kinds of performances in the market without directly requiring your time. And so you're able to spend time on the most important things to you, like life. Okay. So let's continue with this. So rest is what this is all about. All right. So what are some benefits of our system? I've mentioned some of these already, but I've said already it's designed to trade in this vast financial market. We can trade a large variety of assets. We have 5 distinct strategies that are included in our system. Each of these strategies was created, again, with input from technical traders, people who've done this for years and years and years, and have said, you know what, hey, consistently, this particular strategy has been profitable in the market. Consistently, this particular strategy has delivered profits over a particular period of time. And so each of those 5 strategies are created. They can each be used independently, or they can be used in conjunction with others. Our system is capable of trading all 5 strategies at one time, or just one strategy, or just 1 and 3. Number 1 and number 3 is able to trade it on multiple assets at the same time. So you can be trading stocks, you can be trading gold, you can be trading the Dow Jones, you can be trading crypto all at the same time, or only one, and mixing them with different strategies. So extremely complex system, yet simple to use. All the risks can be managed separately. So if I want to be more aggressive on an asset that I believe is more stable, does not have a lot of volatility, is not jumping up and down, I can be a little more aggressive on that. Things like crypto that are much more volatile, or things like the Dow Jones industrial average, that's a very volatile asset. In those cases, I may want to be more conservative. Our system has the ability to trade at specified times or trade around the clock. You can set it to trade at times that are convenient to you, or as we recommend, we trade at times that are most profitable or most likely to generate profits in the market. And so we're able to specify those times with very simple inputs. The built-in management system, it has account protection features. And so we're able to specify, I'll just say as an example, if I'm trading this system and I'm going to have, maybe $1,000, then I'm going to say, okay, I can take $1,000 and invest it in this market. And let's see, what kind of things we can do with that. How profitable can I be? How this works. Well, we're able to specify settings within the system to say, hey, my whole account size is $1,000. So at no point in time do I ever want to risk more than 1% of that, or 10% of that, or 5%, whatever it is. You're able to specify and say, look, if you see a trade opportunity, risk no more than 1% of my account on any individual trade. And in any given day, I don't want to have more than 5% of my account at risk. You're able to give those kinds of settings. And so we work from what we recommend, a top-down approach from your overall investment portfolio. So again, if you have, let's use round numbers, $100,000, someone may have total amount that they have of their life that's invested in something. We're in no way recommending you start taking that kind of money and using it in these kinds of systems. But we are saying, hey, look at a top-down approach. If you start with $100,000, take 5% of that. That's $5,000. Leave the 95% in whatever other elements you have. Leave it in your 401k, leave it in your stock plan, leave it in your SIP, leave it in your CD, leave it at the bank, and so they can keep paying you pennies on it or whatever. Take only 5% of that. And I'm just using this as an example. Take only 5% of that. Of that 5%, we're going to say, okay, that's maybe what I have available to trade in here. And so you may be able to take that and into this kind of trading system and say, okay, hey, $5,000 that I have in there, if I see any kind of trade opportunities, I don't ever want to risk more than 1% of that. 1% of $5,000 is only $50. And so if we see a trade opportunity, the system at most is only going to risk $50 for you. So you have a $5,000 balance. You're only risking $50. If things go wrong and we lost that trade or didn't win, okay, you may have lost $50. You're able to specify a total risk setting and say, hey, I don't want to have more than use the 5% again, no more than 5% in a day. Well, 5% of $5,000 is $250. That says, hey, I don't want to ever risk more than $250. And you can make those as tight or as loose as you want to. My point is, you take a portion of what overall total funds you have, take a very small fraction of that to invest in on your own. And then of that, you only risk a very small portion of that. And so you could even say the 5,000, I only want to take 1,000 of that. And now only take 1,000 and put into some kind of trading or investing account. Something, do it, get something going on your own. And for most people that we've been able to help, and most people that enter these kind of markets and start to see benefits from them, can realize that they can usually get substantially greater returns off of the small portion that they're investing, greater returns on that than they've seen over the whole 95% that's sitting somewhere else. So our system can do all of those kind of protections. That's my main point. But I want to make sure people really understand that that's what's built into the system. So let's look at, what does this advisor do? What is the brain of this system? I've talked about that it's been educated, it's been trained on technical analysis and all these kinds of things, inputs from experienced traders. It's a central brain. It's been back tested. Back testing is just a method to which we can say, hey, if we had applied this particular strategy, let's say go back to the first of 2023, for example, if I had applied this particular strategy and I set this thing up in January of 2023, well, here it is now at the time I'm doing this video, it's December of 2023. So if I had been running this particular strategy, and if I had $1,000 that I started out with, and if I ran these specific settings in here, backtesting allows us to see what would my results have been. What would I have seen? Did I actually make a profit, or did I lose money? Did I gain a little bit and lost it back? We're actually able to see that. So our systems have been back tested for thousands and thousands and tens of thousands of hours on many different assets under a large variety of market conditions, just to prove that they're overall consistently able to deliver some kind of returns. And so the amount depends on how aggressive you are, how passive you are, or conservative rather you are. And then they also depend on, which particular assets. Some assets have generated larger returns. And so there's a point, we'll provide more information along with these videos. We have a lot of postings on our systems running actually in live mode. We have historical things. So you can see, hey, we tested in these particular assets with these settings, and you can see some of those kind of results. So you'll be able to refer to a lot of our materials to see those. Everything that's necessary for the advisor is built into it. All of the technical knowledge has been coded and it's included into this system. It's able to read the actual technical indicators as the market is running live. It's actually able to read signals from the market and use its coded logic to make decisions on taking trades in the market. The main strategies that we have, they don't require much of any user input. So if someone wants to run and start out the box, so to speak, with our system, you can start with some of our basic strategies, make a few, inputs on what your settings and stuff are, and you're ready to go from there. The last two strategies that we have and some other pro elements of that are a little more advanced, and so they may require a little bit of more technical knowledge. But there's definitely the majority of the system, as it is able to be used by pretty much every lay person. Okay, let's continue. So that's the advisor. That is what actually takes the trades, recommends the opportunity, and then so the manager comes in and says, "Okay, this is great that we see an opportunity to buy Tesla stock, or we see an opportunity to buy gold." The advisor is going to say, "Hey, based on what my experience is, it looks like the price of gold is getting ready to increase." Or again, Amazon stock or Tesla stock, it looks like this is a good time to buy for this week or something. The manager steps in and says, "Okay, I see that. I see that. So let me help you." This is the manager and the advisor having this conversation. The manager says, "Okay, I see this. Let me help you in identifying where is a safe place for us. If we're going to buy Tesla stock, then, and you're telling me you saw this because you're looking at a daily chart, a daily, history of this particular stock. Let me go in and look at the last several days, the last couple of days up to the last several weeks or a month or so, and see, based on the volatility that I'm seeing, how much this asset has moved. Where's a safe place to say, if we bought, we're expecting to continue to increase so we can profit. But what if this does not work out? What if you're wrong, advisor? What if you're wrong and this, instead of Tesla start buying, what if it starts selling? What if the price starts dropping? The manager says, "Okay, I'm going to identify this and I'm going to set a point here. It's called a stop loss. It's going to determine a stop loss, and it's going to say, hey, you found this, but this is the place to where if this thing is going to continue to buy as you're expecting and as your experience is telling me, then it should not fall below this price. And we're going to set a stop loss there to say, okay, we're going to execute a buy. We're going to risk our $50 on this particular trade. And if the price comes down below this point, we're just going to cut our losses at $50 and get out. If it stays above that point, I will continue to hold that and we'll expect to profit, off of that $50 risk." So that is part of what the manager is doing. So from that stop loss, the manager is going to say, "Okay, this is the point at which the trade is not valid anymore. And you told me that you only want to risk this $50 or $100 or whatever, based on the size of your account. So this is how much you need to buy. This is how much of the Amazon stock or what portion or fraction of Tesla stock that you need to buy," because all of that in these financial markets have to be calculated. You can't just sit down and say, "Well, hey, I want to buy, X amount of this particular stock and I want it to stay at this price." That has to be calculated because the inputs in this financial system require you to specify how much you're buying and where your exit points are. And so the manager is taking that and calculating those parts. The advisor then will execute and the trade, initiate it, and once the trade is active, now it comes back to the manager, and the manager says, "Okay, now we took this buy here because we're expecting this thing to increase. I'm putting a loss limit here to say if it goes below here, I'm not going to lose more than $50 on here. But, and if the market continues to go in our favor, let's talk about if it goes in our favor and we're profiting." The manager is looking at this and saying, "Okay, now if we profited on this, I have to understand that markets go up and markets go down. If we start to see any significant profits on this, the manager is going to step in and say, I'm going to take a part of those profits. I was risking $50, but we've profited a little bit and we've already made $12 or we've already made $25 profit. So the manager is going to say, let's not be greedy. Let's take our $25 profit. And now, before, where I had my risk down here, where we were risking $50, we're no longer risking $50 anymore because we just made 25. And so the manager is going to say, take my $25 profit. And oh, by the way, the remainder that we have left in there, let's move this up to where now we're only risking $12. So even if we've already taken 25 in profit, even if Tesla continues to buy, then that's great. We'll take more profits. But if something happens and it turns around and starts to go the other way, then the worst we're going to lose, the most we can lose now is $12, which means we would have made 25 in profit already. If we happen to lose 12, we still walked away with a $12 profit. So that's the kind of things that the manager is doing. And all of this is part of our automated system. The automated system, the brain and the manager are working together. They're coordinating this kind of things for us. And by being able to monitor it around the clock, you don't have to be in front of your computer to see that something spiked up real big. And there's been many times we've seen a financial asset, something goes up real high and then it goes back down. And most people's like, well, I was working today. I didn't even know what happened. Well, if you had seen it at 2 p.m. today, you were in big profits. But because you were working, by the time you got off work to look at it, the market had come all the way back down and you're back at the same place you started. So you didn't make any money because you didn't have the time to look at it. Well, our system has the ability to do that. And so it's able to capture that and manage things on its own. Okay. All right. So that's pretty much an overall review of what our system capabilities are. And so I'm going to encourage you to take a look at some of our back testing and live trading results. This is our YouTube channel here. We just created our YouTube channel a couple of weeks ago or a couple of months ago, actually. And we posted a few things there over time. We're going to be posting a lot more videos of seeing how this system works actually live. What are accounts? There's several accounts that we're managing right now. Some very small accounts that started with as little as $500. Some of them are $10,000 accounts. Some of them are $25,000, $50,000 accounts, things like that. And so you're actually able to see, what kind of performance are we actually seeing? What results are we actually seeing in this? Now, of course, nothing of all of this that we have said in here is financial advice in any kind of way. We're not financial advisors, nor do we play one on TV. And so it's up to you to make your own financial decisions. Our goal is to educate you on the fact that there are tremendous opportunities for us in these financial markets that most people are not aware of, don't have access to, and never knew that they could have access to. And there are also tools available like our Akeelah Trader System that can help you take advantage of that. So check out our YouTube channel and see a couple of our videos and stuff in there. If you do join it, I encourage you to like our YouTube video, subscribe to our channel, hit the notification bell there. So when we post new things, you're able to see those new videos get posted and, kind of follow along with some of the things that we're doing. Other areas, ways you can get in touch with us is that you can contact us, email here at contact@akeelah.io. We have a Telegram page. If you're familiar with Telegram, Telegram's a good communication channel where a lot of people in the financial markets, people that are traders and people that operate in there, we use Telegram a lot. That's kind of like the Facebook of people that are operating in the financial markets. So join our Telegram page. It's just Akeelah Official on Telegram. You can jump on there, see again videos and comments and actual screen results and stuff from what we're sharing. You can ask questions, communicate with us there. And lastly, you can check out our online learning center where we have lots of different training videos and things that are available for people that want to start learning about these financial markets. Okay. All right. I appreciate you guys' time. Hope this video was very informative and, we give God all the glory for everything he's shown us and enabled us to do here at Akeelah. And our goal is to help you grow financially, grow spiritually, and give God all the glory for everything. Okay. Thanks, guys. We'll see you next time.